Hello, dear friends. My name is Joseph Areu. As you know by now, for those of you who are listening or watching me for the first time, that's my name. And welcome to this show. Welcome to this talk show about personal investments. I hope you continue to watch and listen to my videos and ask questions. Any question, I'll be very happy to answer them. And indeed, some of you have been asking very good questions, and I thank you. My dear friends, I want to talk to you today about fact sheets. So, some, if not many of you, have invested in unit trusts and continue to invest in unit trusts, which is a very commendable investment vehicle. And when you do, you often receive roughly about every month, you get information, different types of information. Of course, you'll get your statement, but one of the information documents that you get is called a fact sheet. A fact sheet. So, a sheet of facts, as it were, about the portfolio, the bigger portfolio in which you are investing. I'm not sure how many of you do take time to understand that document, but all I want to say to you is that it's a very important document, and you need to understand what are some of the key data points that you should be looking out for when they send you a fact sheet. If they don't, by the way, if they don't send you a fact sheet, please insist that they should be sending you a fact sheet. Because a fact sheet will give you maybe 2 or 3 very important pieces of information that I want you to take note of. Number one, a fact sheet will give you the rate of return, the rate of, if you like, yield that your portfolio. And when I talk about the portfolio, I'm talking about the overall portfolio. Remember, when you invest in a unit trust, your money will be put in a pool or a pot of other monies of other investors. So I'm talking about the total pool of money. So your fact sheet will give you an idea of the return, the performance in terms of return of that portfolio, which of course translates to performance of your own money that you put in there. So for instance, the fact sheet could tell you something like, if you invested a certain amount, by this time, 1 year later, your money should have yielded so much in percentage forms. For someone who invested, say, 2 years ago, the fact sheet will tell you the annualized rate of your money at this point in time would be so much, maybe 11%, maybe 12%, or whatever. If you invested, say, since the initiation, since the beginning of that fund, the fact sheet will tell you the rate of return, say the annual rate of return you would have been earning at this point in time. So it gives you the return, and that is very, very important. Secondly, you should not stop at looking at just the return. The fact sheet should tell you what we call the benchmark, or if you like, the comparator, the return, market return to which you should compare the return of your portfolio. All right? So by way of example, common benchmarks are, for instance, treasury bill rates, okay, or bond rates, or a combination, depending on the nature of the portfolio. But the fact sheet will specify that this is the benchmark against which we compare our performance, right? So when you see the rate of return, the performance has been, say, 11%. In order to make sense of that, you then want to compare it to the benchmark. And they will show you that the benchmark rate has been 12% or 10% or whatever. Of course, you would expect that they are outperforming the benchmark, but sometimes it happens that they could be underperforming. Whatever it is, you need to know. All right? The third piece of information that the fact sheet will give you, which is very important, is what we call the asset allocation of your portfolio. So basically, what is the distribution of your funds? When I say you, I'm meaning you, the investors, all of you who are investing or whose money is being managed by that particular fund manager for that particular product. So, how is that portfolio being distributed or allocated to different asset classes? So, asset classes could be bonds, could be treasury bills, it could be equities or shares for that matter, or whatever other asset classes are available in that market. So they typically draw a pie chart for you, which shows you, by way of example, for example, maybe 20% of your portfolio is invested in treasury bills, maybe 60% is in bonds, maybe 15% is in shares, depending on the nature of the portfolio, depending on the objective of the investment portfolio in which you have invested. But it is very important for you to get an idea of where your money is being allocated, in which asset class is your money being allocated. Why is it very important? For one main reason. Every investor will have a risk profile. And because of that risk profile, there are certain level of risks, certain levels of risk that you may be uncomfortable with, or you may be, depending on who you are. So if, for instance, you are a very conservative investor, and therefore you don't tolerate or you cannot handle too much risk, then you would want to be sure that your fund manager, for instance, is not putting too much of your money in high risk assets like shares. So and how do you do that? Look at the fact sheet. And what do you check in the fact sheet? Look at the asset allocation and see how much of your, in other words, gauge the level of risk exposure of your investment using the fact sheet, and in particular using the asset allocation. And if it is not there, then please make sure you ask your fund manager, what is the asset allocation? So those are three key data points or pieces of information that I want you to focus or look out for in the fact sheet as and when it is sent to you. So number one, it should be sent to you. And if you don't see it, then you should be asking for it. It's very important. But number two, when it comes to you, have an idea of what to look out for. Look out for the rates of return. Look out for the comparators, or if you like, the benchmark. Look out for the asset allocation. Of course, it will give you other information like performance of the economy, general contextual information. That is all great. But I want you to make sure that you get those three right. Thank you very much. I hope this has been useful. Continue to listen to watch, and to subscribe to my videos. Thank you. I look forward to talking to you again.